Welcome back to Halftime Report. I'm Bob Pisani. If there ever was a year active management should have outperformed passive index strategies, 2020 and 2021 should have been it. Yet a recent report from Morningstar indicates that active managers in the last year did not outperform their passive peers compared to other years. Here to discuss the author of that report, Ben Johnson, Director of Global ETF Research at Morningstar, along with Ed Rosenberg. He's the head of ETFs for American Century Investments. Ben, only 47% of all active managers outperformed their benchmarks in the year ending in June. The performance is much worse over longer periods of time. Why can't active managers outperform?
Yeah, so what we saw in 2020 and continuing into 2021, Bob, was another data point that helps bust the myth that volatility is going to create better conditions for stock pickers, for bond selectors, that there's any such thing as a stock picker's market. What we see is over a long period of time, active managers have a very difficult task ahead of them. They've got to get it right more often than they don't. They've got to survive to be able to prove that they're right. And what we see is, especially over longer periods of time, most funds fail to survive. And the ones that do survive, only a tiny minority manage to both live and to outperform their average passive peer.
Yeah, it's pretty remarkable. Only 11% over 10 years of the active big fund managers for equities outperform. Ed, you oversee several actively managed equity ETFs for American Century, and they have outperformed this year. Congratulations. Given the odds, though, you heard from Ben here, how does an active manager outperform these days?
I mean, I think it's staying true to what they do. Specifically, if they're large cap growth, they stick to large cap growth as well as large cap value. But it's also making sure that the fees are appropriate for the fund and you're not overcharging. By having your fees set appropriately and the manager doing his or her job, it gives you the opportunity to outperform over the long term.
Yeah, excess fees are definitely the alpha killer. Equity managers aren't beating indexes, but bond fund managers are doing better. Much more on the battle between active and passive management coming up on ETF Edge, 1 p.m. Eastern Time. Ben and Ed will be joined by Jerome Schneider, who oversees the PIMCO Short Maturity ETF. This is the second largest actively managed bond fund in the world. They have been outperforming. He'll tell us why. ETFEdge.cnbc.com, 1 p.m. Eastern Time.